My name is Kristi Borman. I've been with Central Data for 17 years now, but using our Infor distribution software for almost 30 years. Lots of that in the accounting space, but other areas as well. I like to think I know a little bit about most of the things, but definitely in the year-end planning, I've been around the block a few times, so happy to share with you any tidbits I've got. All right, everybody, here's where we're going today. We are going to talk about preparing for year end and running our year end reports that can be scheduled. You don't have to log in at midnight or anything like that. Our 12 balancing reports. And a balancing report is one that carries a general ledger balance as well as a subsidiary ledger balance. And then at the end, we'll leave some time for questions. Feel free to pop anything in the chat and we will carry on. So when we talk about preparing for year end, the number one thing is the timing of when you want your year end reports to generate. So normally this is done after invoice processing on your last day of the year. And I'll refer to calendar year, but the same as fiscal year. So if your OEEPI job, as we call it, the OE invoice processing job runs at 8 o'clock at night and usually finishes about 9, you're fine to run those year-end jobs anytime after that. You can run your year-end jobs on the first day of the new year as well. The consideration for that is if you are doing any sort of order creation via an API call, maybe you're hooked up to a website that takes credit card payments. When that sales order gets created in CSD, there is a tendering journal for the credit card payment, and you cannot create a new journal until year-end processing runs. So again, if you are creating sales orders with tendering via an API call, you'll want to make sure your year-end processing runs prior to midnight on your last day of your year. Otherwise, it doesn't much matter if it runs on the first day of the new year or not. It's just important to note you cannot post a journal until you've created your new year. The next topic here then is ownership of the year-end report job. So there are 4 reports we run at year-end, or we can run at year-end. We'll talk about when we run them and when we don't. But somebody in the organization needs to own them, meaning that they're going to be responsible to make sure that they actually generated. And we can set it up to, populate to an email and you take a look at it and you carry on with your New Year's Eve celebration. When you have a fiscal year end, we need to make consideration on how we run our accounts receivable, accounts payable, and inventory reports. So if you have September 30th as your fiscal year end, for example, when we're looking at the screens inside of the software, do we want those values or those number totals to display for a calendar year or for a fiscal year? And there's no right or wrong answer, but when I'm looking at sales year to date on a customer, should that be reflective of a calendar period or a fiscal period? And there's no right or wrong, it's however your users want to use the data. We also want to close any open journals, and this is just good maintenance and it's probably part of your monthly checks already, but we just want to make sure that our journals are closed so all of our general ledger and subsidiary postings have occurred. And we can close those journals using SASJ is the screen name, SA for system administrator, S for setup, and J for journals. We also will need to make sure that we have a report schedule set up for year end if we are running these on a stored job. So when we're running them on a stored job, we've got to have that schedule ready to go. So our schedule is set up in SASTT. Our system administrator set up tables, table values. And you can see I've got one here called calendar year end that's running on the 31st day of the 12th month. So the year and the weekday are both starred or asterisks, meaning I don't care what year it is and I don't care what day of the week it is. You're going to run for me if the month is December and the day is 31. So this allows me to create a stored job that will then calculate the date that my stored report needs to run. You can also do the month with the 2-digit DE and the day with the 2-digit LA for last day of the month. There are different ways to set this up. In my head, it's the numbers are the clearest and easiest to use. Okay, so moving into our actual reports, there are 4 reports that we run, and I've just got them here alphabetically. It does not matter what order you run them in, but you can see our first one here is accounts payable. We leave our ranges section blank. We run it for all vendors. You can run multi-companies at the same time. The recommendation is you run each company individually. If you only have 3 companies, that's not a big deal. If you've got 300, that might be a little more cumbersome, but the general recommendation is that you set up a stored job and you just run it for one company at a time. In our options here, that's where we're talking about our calendar versus fiscal year end. So if a vendor is set as a 1099 vendor in the system, do you want the payables numbers updated? And you can answer yes or no for that, and then the other vendors, yes or no. So generally at a calendar year end, both of these would say yes, because they're the same. If it's a fiscal year end, that's where it goes to, do your operators want to see vendor totals reflective of calendar or fiscal numbers? So if you're running a fiscal year end, you may just run to create your new year with the general ledger, and your other reports, you may only run a calendar. But what this job actually does is it takes all the values that are in the current year buckets and dumps them into the prior year buckets, and then sets current year to 0. And I did a little screen print of the report output there on the right, really memorable and exciting, but all you get is the number of vendors. That's it when the report's done. And this is how the data is displayed in the system. So if you're saying, well, what am I actually updating? I'm updating these balances. So at the bottom of this slide, you can see I've got year-to-date numbers and previous year numbers. So when AP, AY, or the accounts payable year-end processing runs, if I ran it right now, it would take those year-end numbers and dump them into the previous year balance. So my invoices in previous year would show 1900, and then my year-to-date gets all set to 0. And then we also have these graphs and charts that are displaying on our vendor screen that are using these numbers as well. So that is what the accounts payable update does. It does not roll any balances. It does not change any transactions. All it's doing is dumping these numbers and zeroing out year-to-date. The next one is accounts receivable. And very similar to accounts payable, there is no options, it's just all the customers. And it's doing the same thing and also giving you this really exciting report output that just has a number on there. So I'm just seeing the number of customers that it runs and what it's doing. If we look at our CSD, you can see that I've got graphs, charts that are using these numbers. And then on the general screen, I can see the empirical data. And again, when I run that year-end processing, I'm just updating these numbers that I'm showing on the screen. So year-to-date goes into prior year, and year-to-date becomes 0. So I often get asked, oh my goodness, I ran it twice, right? If you run it twice, that means both of these buckets are going to be 0, because when I ran it the first time, year-to-date became 0. And when I ran it the second time, those 0 year-to-date balances updated my previous year balances. So now I'm seeing all 0 because I ran it twice. Never fear, at Central Data, we have tools that we can systemically calculate these values and load them back into your system. If it's something that no one in your organization is using, then maybe you don't need it. If it's something you forget to run and all of a sudden on January 2nd you want to run it, just keeping in mind you're missing one day, that might not be the end of the world. It's just up to how your users want to use the data. But definitely if you run it twice in error or you don't run it at all, at Central Data, we have the tools to do the calculations and update en masse without having to manually change these. There is a tool in the software, you have to have security to it to manually update these values in both accounts receivable, inventory, payables, and GL. You just have to have security to be able, and then you can pick up these different fields by customer number and put in your updated value. The third report in our list of reports is the inventory, and it does have 2 A's in it. I get a call at least every other year, I can't find the inventory, but it has 2 A's in it, in similar ranges. Again, the recommendation is 1 per company. If you have an exorbitant amount of ICSW records, like in the millions of product records, warehouse product records, you may want to run by warehouse separately just because it might take a little while. But in general, we just run it once per company wide open on warehouse and product. And this job is doing the same thing where it's setting those prior year fields to the current year values and zeroing out the current year. And you can see our report output there, not really exciting, not a whole lot going on, but that is our output. And here's where we see the values on the screen. So in our overview screen, we've got some charts, and in our general screen, we've got a few values there. There are more fields that are not displayed in the screen that could be used for custom reporting or things like that. But here is where we're seeing our inventory values. The big kahuna of them all is GLAY, General Ledger Administrator Year End. So this is the job that has to run in order for you to be able to post in a new year. So if you do not generate this report, then your chart of accounts is not created, your year is not updated. So this is the one that has to be run at the end of your calendar or fiscal year. And I can see, what year it has created and the output and how many accounts it created. There are conditions where you may want to run this ahead of year end. So for example, if you want to make postings into January of the new year or period 1 of your new year, you have to have a chart of accounts in which to do so. And so we would run year end processing to create that chart of accounts. Now, because we're doing it maybe in the middle of December so we can make some January postings, I need to do that off hours when no one is logged in, and then set the year back, because when I run this on December 15th of 23, it will move me into 24 as the new year. So I've got to set the year back to 23. Then I can make my forward postings with the regular administrative options that allow back postings and forward postings and that sort of thing. When we create the chart of accounts ahead of time, that's no problem. We still want to run GLAY because that advances our year and creates any new accounts that were subsequently set up. So what GLAY does, the general ledger updates, it advances the year in the administrative options. So under financials and fiscal year, you can see the administrative options there. It creates my new chart of accounts if I haven't done so already. So it's everything that's in my general ledger. And it sets the forward balance equal to the ending balance for our balance sheet accounts. So asset accounts and liabilities carry a balance forward. So for example, if I have $100 in my checking account on December 31st, I better still have $100 on January 1. So my asset and liabilities carry a forward balance. My income, expense, and clearing do not. They have a forward balance of 0 because I'm starting a new year, so my sales for the new year are starting out at 0. So I don't carry a forward balance. It's important to note that general ledger accounts, you do not have the ability to make them inactive. You can delete accounts if there is no activity. And by no activity, I mean not a net zero, truly no activity. If I have a debit and a credit for $100 and my net amount is zero, I cannot delete that account. So it is something to take into consideration if you've got a whole bunch of accounts that you want to get rid of. Doing that in a new year is the right time to do it. So if you bought a new forklift in 2018 and you have that fixed asset account fully depreciated and that thing has been gone for a decade, you can go ahead and remove that GL account in your new year. If you are running a 13-period fiscal year, you do have to manually set the dates on the year. GLAY doesn't do that. And you do that on this screen as well. It's a little further down. All right. The other piece I didn't say about GLAY is that it does not move your retained earnings. So if you are using a current year retained earnings GL account and a prior year's retained earnings GL account, you do have to move those dollars. GLAY does not do that for you. And there's different schools of thought about how those dollars move. Central Data has a whole document around different pros and cons of doing a manual journal entry versus adjusting a forward balance. Either way will get you to the right end. All right, so that covers our year-end reports, like what we do at year-end to get the system ready for our new year. And the next section we're going into is our control account reporting. And control accounts represent general ledger accounts that have what accountants call a subsidiary ledger. Accountants like to use fancy words like subsidiary ledger, but essentially all it means is detail. So right now I'm displaying accounts payable, so I can see our vendor number 105 Rainbird sales, the second one down there. They have $21.50 in open payable transactions. That could be positives and negatives. I could have open credits as well as open invoices, but my net amount is $21.50. And when I look down at my general ledger there in green, I can see my total GL value matches to my total subsidiary value in blue, or my AP balance or my AP detail in blue, which means I am in balance for this account. And it is so important that your control accounts are in balance, because when you generate a financial statement and you say, hey, I have $1 million in receivables or $100,000 in inventory, whatever it may be, I need to be able to back up that number with factual data. Our bank, our accountants, publicly held companies, that's very frowned upon if you say you have $100,000 in inventory, but when you run the report, it's anything other than that, higher or lower. Now, I'm not talking about 50 bucks here or there. I'm talking about substantial dollars that are different. And so your accounting team should be monitoring these. I normally say daily, but daily is kind of a little crazy, at least once a week, to make sure that we're staying in balance. On the left-hand side of the screen, I just show the ranges and options that I use to generate this report. So it is important that I leave all the ranges blank for purposes of balancing and year end, because the general ledger number on the report is always reflective of the total general ledger amount in that account. However, if I use a range, like I limit it to vendor number 105 for Rainbird sales, then my AP balance will only show me $21.50, but my GL balance will show me the full $27,404.62. So when you're running the report for individual vendors, it's going to show an out of balance because I've only selected a portion of that subsidiary ledger. So I only have a portion of the AP detail, but I'm always comparing it to the whole of the general ledger. And so it's very important that we make sure when we're doing balancing, we're comparing the whole of the subsidiary or all of the vendors and all the transactions to the whole of the GL. And I've got some different ranges and options here. I generally will do it by invoice just so I have all that detail. What's showing on the screen here is by vendor. And what's great about CSD is all of these reports have the ability to go natively into Excel. So it's an option that you select when you're generating it, is to go right into Excel. And boy, is that great for us accountants. No more fighting with text to columns and getting these text reports into Excel. It just does it natively and makes our life much, much easier. There should be a balancing report that's running every day for every one of your accounts. The reason being so that you can pinpoint exactly which day an out of balance occurred. But you can also set up one to run at year end if you want it to route somehow differently. But we should see these reports already set up and running in a balancing manner. The next one we have is accounts receivable. So our accounts receivable, similar to accounts payable, and I'm highlighting here that we have an out of balance. So I can see that my general ledger is low. Now there are multiple GL accounts making up my subsidiary. I have CODs separated from regular accounts receivable. And so I can see it's actually in the regular accounts receivable that I have an out of balance. So if I take this to my bank and I ask for a loan and they look at the detail, they're going to say, huh, where's that $566? Again, that's not terribly material, but in a perfect world, everything should be right on and in balance. On the left-hand side of the screen, I show the ranges and options that I use to generate the report. Again, the ranges are blank. That means I'm getting 100% of the subsidiary detail or the AR detail. So all the credits, all the invoices, all the service charges, whatever's open and active is generating in my detail, and it's comparing it to the whole of my GL. Next up on the list is AP matching. So this is when you are processing trade payable transactions and you don't fully match them to a purchase order. And so if a common example is I enter a vendor invoice prior to receipt of the PO. Maybe I have to put a down payment because it's coming from China or whatever it may be. I'm entering it before the receipt of the PO. So since the PO is not received, it can't be fully matched. The receiving process hasn't happened. And so it would sit on this report. But there are other reasons that things sit on this report as well. But again, just highlighting, here's what an out of balance looks like when we see it on this report. The most common reason for an out of balance on this specific report is deleting transactions out of the subsidiary ledger. And so I can see we've got 650 in our subsidiary ledger, but negative 3,200 in our GL. So we definitely are probably deleting transactions. And it is standard functionality that there is an event available for when a posted transaction in the AP Invoice Center gets deleted. So I highly, highly, highly recommend you set that event up and email it to a whole bunch of people, because if you don't deal with it, it will create an out of balance. And again, you only get the notification when the scenario occurs. It's not one of those that you get every day and you got to look at it. Nope, it's an event. So when the scenario occurs, you'll get that notification. Next up on our list is customer deposits, called down payments, called tendering, called uninvoiced cash. It's got a whole lot of names there. But basically, I take a payment from a customer and apply it to their sales order. So it could be one of those I spoke of earlier where I create the order online and I take a payment and it comes across as tendering. So it's essentially monies that I have received, but I haven't shipped and invoiced the goods. So I'm still on the hook for those dollars. So that's what we're seeing on our report here.
Kristi, we do have a quick question.
The biggest one here I see where the issue runs awry is option number 3. It gets flipped to credit cards only. Yes. And if you do have cash and check tendering, then it will be omitted from the subsidiary ledger because you've told it credit cards only. So we just want to make sure that that option for credit cards only is no when we're looking at it for purposes of balancing. Next up on the list is our purchase orders. This one also has a lot of different names. It can be uninvoiced inventory, AP clearing, received not vouchered, but essentially what it is I've received the goods into inventory, but I have not yet matched and processed a vendor invoice against it. And it has to be matched in full on both dollars and quantities in order to fall off this report. And so this sits on the liabilities side of our balance sheet. When we process that payable, it just reclasses to regular AP. So it is a future invoices due. It's kind of like your credit card bill. When you roll into Walmart and you buy a bunch of stuff, you've got that milk in your fridge, but you're going to get a credit card later. That's what this report is representing. Stuff you're going to have to pay, but you currently have received. At Central Data, we also have tools for removing things from this report. So if you never get a vendor bill, or maybe something gets processed as an expense incorrectly, it can sit on this report, and you can manually pull things off, but it is processing that payable. This report goes right into Excel like the rest of them. So if you send over to Central Data Support a listing and say, hey, this chunk of POs I want to get rid of from this report, we can do that systemically pretty quickly. You will have to do a manual general ledger entry to account for the dollars that are removed, but it just saves your team time of having to process through all these returns that never were processed properly or something. Next up on our list is our regular old trial balance. So this is our general ledger trial balance. This is a data dump of all of the accounts that are set up in my system. When we're looking at this report, I expect that assets and liabilities total should always be 0. So if it's not 0, then there's a problem. You know, us accountants, we like things to be 0. At the end of every month or every period, we run a tool called GLAP, General Ledger Administrator Profit Distribution, that calculates net income, or that proof in blue, populates it to retained earnings with the offset into total clearing. So when I'm looking at this particular report, I can see, oh, I just need to generate profit distribution, and then it will post my, excuse me, I have more expenses, so it will go into my liabilities, bringing that to 0, and I'll see it hit my clearing account. So we do want to have an in-balance balance sheet. When the year-to-date number is different than the period, that means you've got something in a prior period you need to go look at. So it would be running the period prior, then the next period, and so on and so forth. But generally, you're not out of balance by more than 1 or 2 periods, because you're generating financial statements, and we accountants like our financial statements to be in balance. Next on our list is our inventory in transit. So when you're running multiple warehouses and you're shipping stuff back and forth between different locations, that's when it hits this inventory in transit. So I've shipped something from one warehouse, but I haven't received it somewhere else, or I've received it but with exceptions. So if I ship 10 but I only receive 8, it's going to throw that warehouse transfer into exception stage. So that's when we are going to see things on this report either being shipped or being exception. And we had a question about the event. So that is a deletion from APECE. So you're going to want to look for that AP module, and delete is going to be in the name of that event. And if you need more help setting that up, feel free to drop an email to support@centraldata.com. We've got a really nice document that walks you step by step through how to set it up. All right, next on our list is our direct inventory. So direct inventory is inventory that we are shipping directly from our vendor to our customer. It can also be shipping from a different warehouse location directly to our customer. So either the PO or the warehouse is going to be that type of direct, so a direct order. So when I receive a direct PO, it increases my direct inventory. And then when I invoice process my sales order, or I do a PO return or whatever, then it takes it out the other direction. So in a perfect world, we would expect this to always be 0, because generally I'm receiving POs during the day and invoice processing is happening on that tied sales order at night. So when I come in the next day, it should net to 0. So what I'm looking for on this one, not only is it in balance, but really, why is there anything on it? Now, there are times we hold orders to confirm pricing or to confirm the shipping charge or things like that. But for direct inventory, the theory is it would be 0 in a perfect world. So we not only want to look for out of balances on this one, but also anything that's old. The next one we have on our list is non-stock inventory. So our non-stock inventory is inventory that does not have a product record in the system. And lots of different companies use this in different ways. Some are truly, it's a one-off that my vendors provided. Some are things I do a little more frequently, but I don't want to have an inventory. So this one generally is not 0, because I have these sample items from my vendor hanging out, whatever it may be. So this one, we're really looking at that the two are in balance, that they are equal between the subsidiary ledger or the inventory detail to the general ledger. And again, we can run these right out into Excel, which makes it really great and really lovely for us. Also, with both direct and non-stock inventory, there's another report out there called ICRON. We like to take our acronyms and make them into words, but IC is inventory control, R for report, O for other, and N for non-stock direct. And it's not a trial balance, so it's not a balancing report, but it gives you all the transactional details of that set. So I can look at a product and I can see all of the ins and outs, where I've done an AP costing for part of the dollars and where I've done an invoice for part of the quantity and things like that. I can see all that detail, and ICEAN is the screen name. It's inventory control entry adjustment non-stock, but sometimes we like a report, to be able to kind of look at the numbers, but that's another one that we can use when we're researching non-stock or directs. Next up on our list is our stocking inventory. So this is the one that drives everybody crazy because it tends to fall out of balance. And the main reason is that the subsidiary ledger, the detail behind the scenes, goes out to 5 decimal places, whereas the general ledger only goes out to 2. So anytime I multiply by a percent, or I break a quantity, or I do some sort of math that's going out more than 2 places, it can result in an out of balance between my GL and my subsidiary. We also want to watch this to make sure that things are set up correctly inside the system so that our operators aren't doing things inadvertently. So for example, if you value your inventory at average cost, there is a right way to change the average cost and a wrong way. So the correct way is by going into ICEMC is the name of the screen. So inventory control entry maintain cost, and that allows you to put in the product and the warehouse and the quantity and the cost, and it makes a GL entry behind the scenes. So this tool changes the subsidiary ledger, or the detail of the cost, in this case of the product, and it also makes a GL entry behind the scenes. Now our products are set up in our warehouse product record. There's an average cost field there as well. And that should be set to display only for your users, because if they change that value, that on the actual warehouse product screen, it does not make a GL entry behind the scenes. And so that will create an out of balance. Of course, with standard functionality, we can run the balance change report and we can see that our operators have made that change, but it's better off just to take that security away and teach the proper way to do that. And then you're watching it through the general ledger versus having to identify the out of balances. On the left there, our balancing report, again, we just leave everything open in the ranges and options so that we're getting 100% of our subsidiary ledger to compare to our general ledger. If you are running FIFO inventory, there's another report called ICROF. Again, we like to make our acronyms into words, but that's IC reports other FIFO. That will give you more detail on your different FIFO layers. So if you are running FIFO, I would recommend that you, in addition to this trial balance, you also run that report so you've got FIFO level detail. All right, next up on our list are rebates. So our rebates due from our vendors. So these can be vendor rebates on purchase, vendor rebates on sale, but we create a vendor record. Now, it's important to note that these vendor records will stay out here forever until they are reconciled and go through the proper posting. So if you are creating rebates, you're getting the GL hits, but you're not reconciling them, this report will just keep growing and growing and growing. And rebate due does sit on the asset side of your balance sheet. It's monies that you're received due from your vendors. So we don't want to be creating these unless we're truly getting the monies. But I have seen where when we're doing cleanup of data and we're running data purge programs, if there are open rebates due, it will not purge the associated sales order or purchase order or something like that. So we do want to watch our rebates. If you find that it's gotten out of control and you've got a bazillion rebates and we need to just data scrub them and get rid of them, central data can do that as well. We've got scripts to handle that. SMROR, so sales manager report other rebates, will give you more detail than our rebate trial balance report does. But this trial balance is our balancing report for rebates. All right, and then the last one on our list is work in process inventory. So this is only in use if you're using the value add module. But the same thing, we're looking for out of balances here. It's showing us our work in process inventory. So this is inventory. We've taken it and we're doing something with it. Maybe we're putting it all in a bag, or maybe we're, painting it, or who knows what we're doing to it, but we are taking product, making some sort of change to it, and then bringing it back into inventory. And so while it's in that change process, it's called work in process, or WIP inventory. There we go. All right, that takes us to our questions. I did just look at my notes. I missed a couple of things. So before I open it up, I want to just talk about the first one is budgets. The GLAY function that you run at year end does not do anything for your budgets. So if you're wanting to create budgets for the new year, that's a separate process. If you've never done a budget before, you can start them with a data conversion. So you have it in Excel and you kind of play around with it and then you load it into the software. But if you're interested in budgets at all, please reach out to our support team and we can get you on the path for budgets. I also wanted to mention that you can practice in your test environment. If you want to run year end and see what happens, you can run it in your test environment, just knowing that it's going to zero out values or it'll create that new chart of accounts. But that's what our test environments are for playing with those. And then the last thing I had mentioned, that you can manually change the dollars that you see, like for the customer sales year to date or whatever. And those are done within the module. And then, so for accounts receivable, it's AREMB, so accounts receivable entry, maintain balances. For payables, that would be APEMB, accounts payable, entry, maintain balances. And then for inventory, that would be in the IC module. So those were a few things that I just missed in my notes. So wanted to make sure to go over that. So if anybody has any questions, we can open it up. Not sure if we do or not. Okay.
I'm not seeing any questions right now, Kristi.
One more thing I missed on my notes is SAIC, so System Administrator Inquiry Connection. So that is going to be your connection, who's connected to your database. So when you're when you log into the system, you're logging into that year. And so we want to have all of our users off the system when we run year-end processing. And we can check that with the connection point. All right, and I haven't done a good job of watching my clock, Shane. I'm sorry, I'm ahead of schedule. But I don't think we have any questions. So I will pass it on over to our Avalara team.